I want to tell you how to predict when a recession is coming. So I want you guys to grab your pens and write this in your phone. So this indicator predicted the crash in 69, 73, 89, 99, 01.
What indicator is that?
I'm gonna get to it real quick. We're gonna do a little cliffhanger.
Sorry.
No, you good. I'll get to it. Inverted yield curve. Some people ask, is there a causation or correlation between the two? The most important thing you guys need to know is that 100% of the time, when that 3-year and 10-year invert, so this is everyone's homework for the night. I want you to go on Google and do all the research you can on the inverted yield curve. I'm going to take you back. Once this signal hits, it takes 6 to 18 months for the recession to appear. So, inverted yield curve. August 5th, 2019, the curve was at its steepest point since 2008. And then March, they finally released the news about COVID happening, and then everyone began to panic and dumping their shares. But the indication when I was screaming to everyone before, because this is before I came across you guys, and I only had like 2,000 followers. So
like 60,000 ago.
Yeah, it was a while ago, right? So I was like, okay, great. No one wanted to listen, but it's like, if you are a technician, you can see we were getting towards highs. But I think the most important economic indicator for my long-term investors, especially, because everyone keeps saying, aren't we going to crash again in the fall? And I'm like, no, you just want to repeat what happened in March because you feel like you missed out. And I get it. It was scary as hell. Right? So, and then even when I'm talking to Rashad, I'm like, man, get on to 97, 99. And he looking at me like, bro, you better not be wrong about that. Better not be. You'll never be on another episode ever. But when the inverted yield curve breaks, that's this time that you guys need to know that a recession is coming. And while it's scary, it's also going to be one of the greatest buying opportunities that you have if you are a long-term investor. So that's my take on Apple, and also how to know 100% of the time if a recession is coming. So thank you.
Nah, there you have it.
I feel like we should just have a round of applause for that.
Right?
Like, give me some claps in the comments, man. That was well done, man. Well done, Ian.
Market Mondays Business School.
This dude ain't playing.
That's a fact, man. I told you, man. It's better than college. It is college. Shout out to Mark on $100 super chat. The Dark Knight. He calls himself the Dark Knight, but I call him the Archangel. Like Michael. Where'd this dude come from? He just came out the sky.
I told him, I told him, yo, he's the Oracle for real. He didn't like the Oracle, but everybody, I mean, it's fitting, man. Like, it's fitting. Like I told you, the Oracle knew Neo was coming in the Matrix, and he's been watching the game from the sideline. He said, these guys want to learn. Let me grab them. So shout out to Mark.
Yeah, shout out to Mark, man. So Ian, let me ask you, that was dope what you just did. So where are we at now with the inverted yield curve?
This is my favorite thing to say in my Red Panda chat. I want you guys to tell me. So this is going to be the homework for everybody, all the earners and everybody watching on YouTube. Type in chat where we are in terms of where the yield curve is, and are we inverted or is it back to positive sides? So this isn't something that I made up, but once you dig deep into this rabbit hole, you'll start to see why we're there. And then also another thing that you guys will be able to gauge is the volatility index.
Yeah.
And for everybody on YouTube that are not familiar with me, that are watching the replay, I actually trade. I'm not just some talking head that put some wave grease in my head and just hopped on here on Mondays, right? So 1281, if the VIX future reaches 1281, that will also be a sign that we will either have a strong pullback or a small crash. Crash happens every single month. So what we had in March was a economic calamity, which there are a couple of different, we'll talk about that later. I think what happened more than anything, it gave investors a chance to get out of some positions and then reallocate capital once we hit the lows. So you had that quote last week, like you need to know what you're going to do the next year in advance. That's true, but I want you guys to map out where you want to buy in if we do have another panic. But $12.81 is a key level on the volatility VIX future. If we hit that, our market will begin to slide down. For those of you who follow me on IG, by that time, fear and greed index should be at like 85, 91, or 95. And what is the quote that Buffett has? When everyone else is fully optimistic, that's when we need to be a little bit afraid, and vice versa. So those are some indicators you can pair together to see when the market is going to turn around and also when the market is going to drop. But VIX is at 23.85 now. In March, the high was 80.85 for the VIX future. And we're at 23 now. So we have a little bit more to go. Maybe by November, December, we should get to 12.81. But then be careful, because that's when we can see another tailspin in the market.
Yeah, and your fear and greed index, they can just get that on CNN. I notice you've been posting that, but some people get lost at where they can find that. Is it CNN.com?
Yeah, you go to CNN. You just Google fear and greed index and it'll come up on CNN. For my technical investors, I know it's not the sexiest indicator that we can use. I know we can use like shaking volatility and things like that. But for those of us that are getting started, a lot of times simple is a lot better. Simple is a lot better.
Yeah, that's a fact. And it's interesting that you said that, because I called Wall Street Trapper. We spoke on Sunday morning. I just called him like, yo, I hit him like first thing I woke up. I'm like, yo, I don't feel good. Like this don't feel right. Like this is going too good. I get paranoid when things go too good.
That's a fact.
That's
a fact.
He was like, yo, I feel you. He's like, I feel you, man. Like it's crazy, because it's like everybody's talking about the stay-at-home economy, but I don't feel like there's no such thing. There's no such thing as a stay-at-home economy. It's really the government economy. Like the government's propping this whole thing up, which they should do. But it's like this whole house is built on stilts right now, and I'm not really sure how long or how sustainable.
Please let me say this real quick. I'm going to cut you off. You know you my guy. Tech is up 266% from 2015. The other 495 companies in the S&P 500 are up just 25% over a 5-year period.
So that's
top literally the stilts.
Top 5 tech, right? So we're talking Amazon, we're talking Google, we're talking Apple, Facebook,
the big boys.
So they are making up 266%. They're up, and you 25% for the rest. That's
over a 5-year period. So they're averaging 5% growth. So this is what I've been saying for a long time. Most corporations are not printing the revenue that they thought that we did, and we are more valuable than we ever got priced for. Like think of what was the biggest tech company or biggest company in S&P like 10 years ago, 12 years ago. It was Exxon. Like, it's absolutely amazing to see the transition of power, but it's also very scary, because if it was not for tech and maybe a couple other of companies, the entire market would be bleeding right now. Like we're getting decimated. So thank God we have those, but man, we are in a very scary place. Even though we are out of the immediate danger, it's like looking at a meteor about to hit Earth, and it's like we're trying to warn people at the same time. It's not many good sectors available. Even if you guys, for my technicians, if you go through the Dow 30, there are not many good companies in the Dow. They're not. So
even if we have these long-term plays, right, 5 to 10 years, should we potentially start shorting some of these top 5 techs? What do you think?
Nope.
Just keep them.
We can only short them if we get an indication that it's time, because this is the thing about resistance, right? Support and resistance are not concrete walls that prices cannot penetrate. So if Microsoft and Apple keeps 200 billion on hand, that's why I keep saying it's like if any company gets popping, they're going to do the same thing Coach K would do at QC. Let me snatch him up. Great. TikTok to Microsoft, that's a little baby going to QC. Same thing. So they are going to acquire Twitter, of course, is trying to get into the fold, because there's not a lot of companies that are producing profit. So they want to snatch everything up that's available for their own bottom line as well. So it's really, really tough right now. And that's why for all my entrepreneurs, I tell you, like, make sure that you are valuable. So in this economy, you will be able to produce for yourself and your family as well. But right now, there are not many companies that are producing at a high level. Very few.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.